folks, Scott here, and this is the wrap for Thursday, June 6th. A day that you should be aware of. It's actually D-Day. You may have missed that. Too many of the talking heads and pundits on TV will fail to mention it, but this is an extraordinarily important day. If you haven't read up or studied up on D-Day, please do. It's everyone ought to understand what happened that day. It's arguably a day in which you could point and say it saved the world, or at least saved our lifestyles that we enjoy now and the freedoms we enjoy around the world. So thank you to all who had forefathers and loved ones that fought in that during that infamous invasion of the Normandy coast. Just remarkable, amazing stuff. In fact, I just finished reading Band of Brothers, so the HBO series is fantastic. The book is fantastic as well. Just extraordinary, absolutely extraordinary. Highly recommend it. All right, let's talk trading, though. Today we dipped below the 50-day moving average. That's at 50, that blue line right there. That's the 50-day moving average. Dipped below it and then closed well above it. So I thought it'd be interesting to show you the results of fading gaps after dipping below the 50-day moving average and then closing higher. And let me see if there's any other filter on it. Nope. Oh, above a 200-day moving average as well. Above a 200-day moving average. And there you go. 50-50 in terms of which way we're likely to gap the next day. However, as I suspected, it's a bullish pattern, right? You dip below it, the bears lost the day, the bulls won the day, got back positive, so bulls are still going to be a little bit more confident than bears will be tomorrow. So a gap down is favored to the long side. A gap up shows a little bit more risk. This is using an end of the day stop, so definitely a little bit lower win rate than normal. Again, sample sizes are not huge, but it's over 30, so statistically significant to a degree here. So, and it fits with my belief and logic of how it should work. So watch out. Doesn't mean I won't short an up gap tomorrow. In fact, tomorrow is also the day of the monthly jobs report, which historically has actually been an okay day for shorting up gaps. And it's Friday, which has also been an okay day for shorting up gaps. So this is not enough to keep me from shorting. Just know that down gap, at least based on this one study, is the more preferable direction to trade based on history. All right, let's look at today. It was looking like it was going to be a nice, easy, simple setup to trade in the DOC zone, which showed very good numbers. Or that's not true. Showed neutral to slightly attractive numbers, but had some positives to boot. See, not bad. A gap down between the close and low is where we opened, though, in, I believe, all the indices. I'm just double checking visually. Yep, looks that way. So we opened down, sold off into the close, opened below yesterday's close, but above yesterday's lows. Good win rate, just slightly weak on PF, profit factor. So I had to dig into the guides. And let's see, following unfilled down gaps in general, especially when you've had recent weakness and above a 200, has been favorable for trading gaps in either direction. Let me show you the actual gap guides. We'll do futures first. So DCL zone, we opened 1606 and a quarter, 1606 and a quarter, 1.5 points down in the DCL zone. So it was a small gap. Needed a 6 and a quarter or 6.5 point stop. But using all size gaps in the zone historically, so which the average size is bigger than 1.5 points, this was a good zone. 76% historical win rate and 1.5 profit factor in the S&P, and good odds for the extended target as well. Scrolling down further, the YM was similar, also good numbers. A little bit weak in the NASDAQ, and it was a nominal gap anyhow in terms of profitability. And then the Russell was neutral to slightly attractive as well. When I say a little bit weak, it was weaker, and the NASDAQ number was still okay. Just not quite as compelling. Looking at the ETFs. Neutral in the Spider, neutral in the Diamonds, neutral in the Qs, just slightly attractive numbers, good win rates. So not a slam dunk by any means, but we have the unfilled gap that I just mentioned from yesterday. That was a big positive. And look at my other analysis that I shared. After a 20-day low close in last night's wrap, this was not a good number. Hold on. It was a good number for down gaps. Correction. It was not so good for up gaps. Even that was discounted by the unfilled gaps. The down gaps were okay after a 20-day low close above the 200-day moving average. Unfilled gap was a positive. Data was neutral to slightly attractive. So it looked interesting for trading actually in either direction. And I was out because my daughter's elementary school graduation, and we have family in town and visiting. So I was out all day until about 1:30. So I was not able to trade my probability-based accounts. I did have my mechanical system take the trade, and it traded and caught a winner and actually helped for the whole position for the extended target. So it turned a 1.5 point gap win into about a 4.5 point win, which was cool. So good in that regard. Disappointed I missed in my core account, but that happens if I want to be highly involved in my kids' lives, which I do and will. I'm going to miss some trades. So I did not look at the range, guys. I just took a look and spoke to some folks in the trading room. It didn't look like there was much there on either the 15-minute nor first-hour guides today, so I didn't miss anything there, which was great. But I did do a setup into the close. Now, I don't do many discretionary trades, especially intraday trades, but I am going to brag a little bit about this, because not to brag per se, but I want to share. If it sounds like bragging, I'm sorry, but rather to share the thought process, because this is a real simple one and a very profitable one. I've done this in the past. It's a really good one to think about. When the market is stretched around like key moving averages, we had a little bit of a parabolic move yesterday, and then we get down around this moving average. If the market is positive in the afternoon, after this recent weakness, like a 10 or 20-day low or probing beneath a 50-day moving average, and now has turned positive, you should be looking for opportunities to get long. So that's what I did today. And my plan was, if to do it whether we traded below the lows or not. But if we traded below the lows and then reversed, I was going to be that much more aggressive with the position. So we traded, you can see, broke down middle of the day, doldrums. This shouldn't be happening. Big money's not normally trading. So this is probably the folks in the pits running stops. They reversed it. I came back, started looking at the market around 2 o'clock, and it was finishing up this little move right there, which is probably hard to see, but it broke through the blue lines of prior close, and then pulled back, and then that was rejected. When it got positive again, I went long. Nothing fancy on the entry, just went long exactly 1609. And I set it up to scale out 1 point in front of the Globex highs, which were around 1650. So my first target was 1615.50, which was up here for plus 6.5 points. In the second half, I held to the end of the day and literally managed it right into the close of the futures and got out at 1623 exactly. So almost called even the higher that it is, held it right to the day. All because of the recent weakness during a bull market with support underneath, price action confirming a potential fake out, and knowing that are likely to suck in some longs that are covering their shorts, as well as speculative longs trying to get positioned off this 50-day moving average. So I'm very proud of myself, primarily for sticking with my plan to evaluate the setup as soon as I got back today, which was what I was thinking, and to leave the darn thing alone, meaning not take profits too early. I just stayed busy. So worked out well today. There's a thought to think about for future such scenarios, and there you go. That is the wrap for Thursday, June 6th.